Hi guys, we have an amazing video for you. Please watch this until the end. We have a Bitcoin bottom price prediction. In this video, we're going to tell you when we think Bitcoin will bottom and the exact price target. The information you're going to hear is absolutely shocking, but keep in mind, last year when Bitcoin was at $68,000, we were calling for it to go below 20,000 when everyone else said it's going to 100 and 150. So we very rarely make price predictions, and that is why this video is super important, because our thesis is based on mathematics and historical data. Also, I've noticed that a lot of you guys that are watching our videos are not subscribed. Please subscribe to our YouTube channel so that you don't miss any of our future videos, and please support us by putting a like and your comments below this video. It really motivates us to make more videos for you. Thank you very much, guys, and I'm going to hand the mic over to our chief market strategist. Have a good day.
So into the charts we go, and we see that Bitcoin on this Saturday is just inching down ever so slightly on the daily chart. Notice again here very carefully, the low pivot from yesterday, we're still well off of that. So again, we're kind of inside of this pullback day from Friday, and again, we haven't taken out the lows. Now, having said that, there's no doubt that things have shifted to a more bearish stance. Not overwhelming yet because we haven't confirmed below this line here. But the bottom line is, if we have a weekly close below, which is again Sunday night or Sunday evening East Coast time here, that is never a good thing, right? You never want to see a weekly close below a major line. It always kind of increases the negativity of a chart that is already starting to look bearish. So again, we'll see, but again, at this stage, I'd be somewhat surprised if we were to rally back above, basically 18,500 would be the trend line to get back above. In the very least, even a rally back to this pivot low right here at 17,600, which is the low from June, would be a small positive. Again, is that possible? Yeah, I mean, it's $800 higher on the spiders. But again, as of now, usually what we see on weekends is that in general, it's very quiet action. Price goes up a little, down a little, but ultimately by the end of the weekend, it generally is sideways. So that would indicate to me that we likely wouldn't get back above those levels. So again, what does that mean? Well, it means if we confirm to the downside, then you definitely are looking for that 12 to 13,000 level. And again, that would be my downside high-end target. Now, again, do I think it's going to go lower than that? I mean, if you had asked me to make a choice on a target, I think I've isolated down the likelihood that we probably go to about 8,500. That's becoming my zoned-in target price for Bitcoin to make a low. I also have some stuff to reveal here, which is saying that I do believe that within 6 to 7 months, we will have a low pivot on Bitcoin. Now, it doesn't mean that we're going to go back into a bull market. I think we could be in a protracted bear market, sideways action with, hard to kind of get Bitcoin going again for a while, but I do think the low will be in 6 to 7 months out. Now, let's talk about why, and this is very, very interesting. So I was doing some research, and what I thought about was basically how what's very similar to the financial crisis in the crypto market was FTX collapse, right? So if you look at Lehman Brothers, and again, for those of us that are young, you may not have been investing at that point. You may have been even too young to even remember that. But Lehman Brothers in 2008 failed. It was a big bank failure. It was the biggest bank failure at that time, and it really was a shock to the equity markets, to the whole entire system, right? That kind of got the starting point of where it eventually led to the Fed starting quantitative easing, which then began the bull market in 2009. So what I want to show you here is this, right? If we go to the S&P 500 and we go back to 2008, I want to show you when Lehman Brothers failed, and then basically from that point on, we can go to and extrapolate out where Bitcoin could be headed based on that. All right, so again, we're back to 2013. I'm going to keep going here. 2011, 2010, 2009. All right, we're just about there. Okay, here we are. So in 2008, September 15th was where Lehman Brothers collapsed, okay? So again, right on this candle. Now, what do we notice? It was a big red candle. Afterwards, we got a little bit of a bounce. We then saw a continued decline all the way into '08, and then finally the low pivot in March of '09, right? So if you look at this, so September to March, that's 6 to 7 months. So the idea here is if FTX is the equivalent of the Bitcoin collapse, and let's be honest, FTX was the third biggest exchange. I mean, if there was a shock, I mean, Terra Luna was a big deal. Celsius, it was mediocre. It was mid-level. Voyager, I mean, you've had lots of bankruptcies, but I don't think anyone's going to deny that FTX is kind of the earth-shattering shock of the crypto markets in terms of its size of the failure. All right. In addition, there was a lot of money from big institutional investors that were invested. I mean, Tom Brady, Gisele Bündchen, I mean, celebrities, I mean, you name it. There was big money involved. So it's really this kind of earthquake through the crypto sector. So again, that would be my equivalent to the Lehman Brothers collapse, which again, if you go on a time frame, a lot of people think Lehman, when it collapsed, marked the low pivot, but it actually did not. What we can clearly see here is that this was your Lehman Brothers move. Then you bounced back a little, and then you collapsed all the way down here, and it took another 6 to 7 months to bottom. So what does that mean? Well, if this is November, 6 to 7 months, you're talking about June of 2023 as being the bottom. In addition, what we can extrapolate out from that is that you basically were trading around 1,200 when Lehman collapsed. You bottomed at around 600 and change on the S&P, right? So 12 to 6. It was a little bit on the high end of the 666 was actually the low, which is kind of freaky for those of you that kind of know what 666 represents. But in any case, that was the low pivot, right? So you're talking about close to a 50% decline. So now we know, and again, there's nothing written in stone. I'm extrapolating from history, which tends to repeat, that 6 to 7 months from FTX should be a general bottom level on crypto. In addition, we saw the S&P decline 40 to 50% from the Lehman Brothers collapse. Therefore, from this 17.5 to 18,000, 19,000, basically the range we've been chopping in, you would expect a 40 to 50% decline. Well, where does that put us? It puts us just below $10,000 on Bitcoin. All right, so now if we go back to Bitcoin, let's take a look here. All right, so if we go all the way back to current levels, this point right here was around 18,500 where the breakdown really began. This is really where the FTX collapse started, right? This candle, then this candle. So what we can look at here is the starting point was around 20,000, or you could take from 18.5. Either way, if you take, let's say, 50%, you're down to about 9,000 or just below. If you take the 18,000, you're down to about 9,000, give or take. Now, one of the interesting things about that is, so number one, we know, or at least we can surmise 6 to 7 months out, now 50% decline from the 20-ish to 18,000 level, which puts us just below 10,000, 9,000, we'll call it, maybe 8,000 and change. And then what we can do is we can look at other trend lines, right? So if we go to our weekly chart, we look at a trend line that starts back in 2017 to this level here in 2018 and 19, and to this level right here in 2020, which was the COVID low. Where does this line come out to be? Right around 8,500. Now, granted, this is a slightly upsloping trend line. So what does that mean? Well, it means that we could potentially, by the time price gets down there, it could be 8,700, somewhere in that vicinity, maybe 8,800, basically 9,000 or just below. So now we have a confluence of factors that are now showcasing a potential target for the Bitcoin price drop. Now, again, it doesn't mean that my 12 to 13,000 level here is not going to get a bounce. That's going to be an awesome level for a bounce. But ultimately, if you're asking me where it bottoms and when, I'm now isolating down where I think it will, at what price, as well as the time frame. And this is powerful, guys, because what this means is that as we come down, I'm going to continue to accumulate Bitcoin, especially my hodling position, where as we get down sub 15, I'm going to buy more. When we get down to 12, when we break 10, I'm going to buy a bunch more there as well. And I'll still leave a little room just in case it pierces, because we know that charts in full-out panic can pierce. So maybe if it goes down to 7 or 6 or 5, I'll just continue to add down there. But I think this is what I'm looking at right now, and it's pretty darn cool if you ask me. All right, so that's a little bit of earth-shattering info right there. I think that's pretty darn cool if you ask me, in terms of kind of looking at the kind of the equivalency in the equity markets of an earth-shattering event when the banks were collapsing versus here we are in some of the big-time crypto exchanges collapsing. You could argue that the crypto exchanges are the banks of crypto, right? Because they're the ones that are holding a lot of the money. They're the ones that are making the market. Guess what banks do? Hold a lot of money. They make markets, right? So anyways, just some cool things. Now, looking at Ethereum, Ethereum had this awesome snapback. Impressive that Ethereum's only pulled back just a little bit. It's still below this line, so you have to kind of be a little wary of this, but it's a long way away from confirming at this point. Would have to close below basically 1065 to confirm the breakdown. So it does leave a possibility that Ethereum could start to trade up just a little bit as well, which is kind of interesting because the Bitcoin chart to me looks a little bit weaker than the Ethereum chart in this situation. Now, if we go to the Cardano chart, Cardano had that awesome bounce, pulling back just a little bit, still well off the low pivot, which also was this trend line down here. So this is now the level to beat. As long as you stay on top or above this level, this is major, major support. And again, I was actually pretty close to picking up more Cardano down here. But again, I just didn't pull the trigger. I was looking for a break of 30 cents, and it never broke 30 cents. All right, let's take a look at Polkadot. Polkadot again. Polkadot's actually having a small update here. Again, big drop. Remember, just before the collapse of FTX, this had been basically proclaimed a commodity, and it actually had made new highs while Bitcoin had been rolling over as well as some of the other cryptos. But again, there was just too much pressure, too much fear when we saw the FTX collapse, and it brought it in. But I do think that you could see a recovery on this, and it could start heading back to this one. And again, even in a bear market, there's still going to be winners. Remember, Quant had recently had a monster move. We actually played it just on the pullback for a quick little gain. I think last I checked, that was a good exit. Let's take a look at that again. Yep, that was a very good exit to exit right up in this range here. That was very, very good. It's almost pulled back. Now, I told you yesterday, guys, I was thinking about buying it again, and then I rethought that, and I said, you know what? It broke this trend line here. It's trading. I mean, this is a long-term trend line, right? So it doesn't make me want to jump in here, and I decided to stay back. Now, if it dumped out to this 90 to 92 level, yes, I think at that point you have enough space for a bounce to occur to trade back to the scene of the crime here where it makes sense. But at the current levels of like 110, no thank you. It's too risky for me. I basically was doing a risk-reward assessment on it, and it just did not fit the strict criteria that I looked for. All right, let's take a look at Solana here. As we jump to Solana, let's take a look at that one. Solana's kind of creeping back down just a little bit, just like Bitcoin. I still think Solana, based on how oversold, it has a good chance to turn back up. But like I said before, there's a reason why I stopped accumulating at 4.5% of my portfolio. Because, again, the way this is trading, there's definitely some risk involved that it could go much, much lower, maybe even to zero, right? So for me, it's a calculated risk of my portfolio. It's knowing that, again, just in some of the recent trades we've made on Solana, we've been able to make some good money on those positions as well. And so, again, it's kind of a calculated risk where I'm willing to give it a shot for the chance that, I mean, this thing could trade back to this low here at 28, and we could make a fortune on that. So that would be an awesome move, but it could also go down much, much lower. All right, let's take a look at Avalanche real quick. And again, Avalanche here continuing to kind of inch back down here. The big thing on Avalanche is watching this trend line here. We closed back below it here, then back above it, then slightly below it, and looking down here. I want to see this low pivot hold right here around $12. That would be very important to me to see. If not, it could go as low as $10 before it gets to support. Now, I do have a small enough position where I could accumulate a little bit more, but we do have to be a little bit careful, again, in this unprecedented period. Now, the one thing I will say is that I do think regulation will be announced within the next 3 months. The reason I say that is because basically there's going to be a lot of political pressure from people that are getting crushed in FTX, including big money. And that's honestly what makes politicians move fastest. It's when big money loses big. And I'm just being honest with you guys. That's the answer. Because when big money loses, these are donors to the political parties. I mean, these are people with a ton of money that have influence. And so I really, truly believe within 3 months, Gary Gensler will have a framework. And again, I know it's crazy, and people think I'm crazy, although I do notice that people are starting to turn around on this one. I've said for a year that I wanted regulation. I wanted transparency. And again, a year ago, people were like, oh, you're insane. That's horrible, blah, blah, blah. Now, all of a sudden, people are like, you know what? Maybe a little transparency isn't so bad so that people don't have to worry about their whole entire crypto portfolio vanishing into thin air, right? Now, granted, you could take it off exchanges. That's fine as well. But honestly, As an investor, we shouldn't have to do that. And that's my point. Think about this. You're giving business, you're creating commissions for these entities. You shouldn't have to worry about losing your whole investment. At least that's the way I believe it. These companies are supposed to serve us, the investors, and we shouldn't have to worry about, again, losing our entire investment because they made stupid decisions. It just should not work that way. So I welcome regulation. Obviously, I hope it's good regulation. I welcome transparency, and I want to know that my money is protected when it's on exchanges. I don't want to have to think, do I, just to be safe, do I have to pull it off an exchange? I mean, I shouldn't have to do that. So let's go. Let's get this out there. The sooner the better. Wouldn't it be something amazing if the regulation is finally put into effect in 6 to 7 months and it all coincides? How cool would that be? You guys have a wonderful day. Cool video today. Have a great one. Take care.